Will the markets rally or will they retrace? Especially as today is D-Day. After Donald Trump's speech yesterday about the current affairs in the Middle East, he seemed to have doubled down on his threats. And it looks like today, funny enough, after market close, he's going to announce whether he's going to do as he says or he's going to delay as he's done many times before. Now, I'm going to go into the charts in a second, but my name is Alvarez. I've been in the industry since 2017. I've been trading since 2017. I own a marketing agency, and I know the ins and outs of this industry like no one else. Now, all I need from you guys is that you need to turn up every single day, and I'll be doing 5 to 10 updates on market analysis, where the market I think is going, and what kind of key informations are happening. And to be honest, I'm going to show you something quite interesting by the end of this show. On yesterday's show, we discussed about a rally happening because of the key factors being broken. We talked about a breakout of this downward channel, and we looked like we were going into a further expansion up due to these support levels and the support trend lines that we had drawn. Now, the problem is, we did rally, we got to the nice move up to almost to the areas that we were talking about. And of course, around this exact area is when Donald Trump started speaking and he doubled down hard on his threats. Now, where we are at this present moment is really, really interesting. We've had a bounce off the monthly open, which is a very key support line. I was thinking about the 68,000 level. And if we break back into this trend line, we are looking like we will do at least 1%, 1 to 2% move up. We have to watch this space. It's really, really important. Now, this also works in the opposite direction as well. If we break below the 68,000, it looks like we will have a further breakdown, and there is a high chance that we could break back into this channel, which could cause further pain. And the bottom levels look like it could be sub 60,000. If we look at USDT dominance, it looks like it's going to be moving further down, and that retrace will most probably come and tap the 7.84 level. Now, if it breaks that even more, we could be going and testing these sub levels around the 7.62. But before we see that, we need to make sure that we break the key level of 7.868. The further this goes down, the higher chance of the market rallying. If we look at total market cap, it also looks like we're in a position to have a further move up, but this isn't 100% guaranteed. Again, we are still marred within what Donald Trump is going to do, but it looks like, especially when we look at the VIX, it looks like the market is fully on board that Donald Trump is either going to make a deal or he's going to delay or something of a combination of the two. And it feels like they don't think that he's going to do any of the threats he's talking about. If we look at oil, it looks like we're having a bit of a retrace, but to be honest, we will see what happens on this aspect. Even though there are rumors now that Iran is doing some sort of toll service to oil and letting ships through, some reports about how their transponders are not being utilized and this, that, and the other. And in Donald Trump's speech the other day, it looks like he confirmed that something on that level is going on. I still believe this is going to go up. We will see, because the thing is, we want to explain that this is just a futures chart. This is an actually delivered cost, and I think the delivered cost of oil is going to go up more and more and more, especially if you think of factors such as the ships have to be refueled and a whole bunch of other things that are going on, and those tolls are actually adding cost to the price of oil. So I expect that this, if Donald Trump states something that's positive, we'll have a pullback, possibly around to the 107 level, and then we'll slowly start to rise up again. I don't see this going down to the sub 60 levels for the next coming year. The S&P 500 also looks like it's on a V-shaped recovery, which is quite spectacular. But again, I'm still going to be relatively cautious, as it could be what I described last time and yesterday, where we could be seeing this upward channel, which looks pretty promising, and then a breakdown, as I inevitably believe that inflation is going to come and bite the market in the rear end. However, if we look at the PMI score, we still see that the USA is growing at the level of 54%, which is a good, somewhat healthy number. Although, if we look at the trend, it looks like the growth is slowing down, which could indicate a potential positive intervention from the Fed. Again, that all depends on whether unemployment is going up or down and whether inflation is coming in. That is a bit of a complicated situation. The next key inflationary number is going to be extremely important and can dictate the direction of the traditional market. Now, my biggest area of worry at this present moment is the dollar, is the DXY at this present moment. We're seeing a completely strong reaction of this multi-year trend line. I mean, if we go back all the way through, it's gone all the way back to 2008, and it's followed this completely aggressively. And if we look at the trends, we're seeing similarities that we see in each of these points throughout history, where we've seen a very strong reaction and an acceleration up on the value of the dollar. Now, what we're seeing here looks like something similar. We will see what this happens, but the thing is the key number that we have to look at is this $100 level. If we break and hold that, and even more importantly, if we break the $100.98, it looks like there will be a confirmation and going up to these higher levels. And why this is important is because as the dollar goes up, it is an indicator of risk off. If people are choosing to be in fiat and the dollar and not in stocks and finances and various other assets, it looks like they are willing to forgo depreciation of the dollar, inflationary factors, because of the fear of what the market could go through. Now we look at other factors as well. The ones that I promised you about is the MVRV score. The MVRV score is in essence a conglomeration of how many wallets, medium wallets that are in profit, that are in loss. And usually when it gets below the 0% level is where we will see the bottom of this market and the movement up. And we're not really there yet, especially if we look at this other graph, which states the amount of new holders of Bitcoin to the old holders of Bitcoin. And it looks like every single one of the holders that is currently supporting the market right now are new holders, and their average buy price is around $85,000. Now, historically, they are underwater around 19%, but if we get towards the 25% of them being underwater at loss, that's the point where they usually capitulate, and we could see a further spiral down. And if we look at this historic data and a historic view of Bitcoin on the weekly, we see that there is a alarming similarity to the previous run in 2021, where we see the first leg down, the second leg down, the second leg down, and then it looks like we're at this third leg down here, which could potentially tap that 59,000 level. And if it gets really, really bad and this conflict goes really longer, we could even go down and tap these lower 40 and 37,000 levels, where there's an inefficiency wick there. Anyway, I appreciate you guys being here. It's been a little bit longer than 10 minutes, but come back every single day. This builds up. It builds up your knowledge. It builds up the market. And yesterday we were correct and we played some good plays. All right, I'll catch you guys later. Make sure you press the bell. Make sure you press the comment. Make sure you go and check out the Alpha Hunters group, which is the group that we will be talking about and giving all of our trades within. And we can go from there. All right. I appreciate it. Take care. I'll catch you later.